Yo guys, welcome back to my YouTube channel, or welcome if you've not been here before. So I just thought I'd jump on today and do a trade breakdown for this trade that I did today on Australian dollar, US dollar. It's one of the best trades that I've ever done, and it's actually quite a simple trade. So I'm going to break that trade down for you guys. Alright, so today, going into the market, I woke up just before London session started, about 7:30 a.m. UK time. And then I got to my charts just before London opened. So I came to my charts and I was flicking through all the pairs that I've got on my watch list here, and I was mainly just looking at for some 1 minute order flow to basically take a trade from to continue that order flow. So I didn't really see much on the other pairs, and there was only really AU which was looking good. So I'll break down now what my expectations were for AU. So like I mentioned in my weekly outlook for AU, what I was looking for at the start of the week is a continuation from this POI down here, and we actually saw that continue to play out. And I was looking potentially we could get a reversal from this area here, but we broke straight through that as well. So I was continuing with my bullish expectations on AUD USD. Now, in terms of the daily time frame, looking at where we are, and I'll just take the drawings off so you can see more clearly. We're between this high here and this low here. So up to the high there, there's really still a lot of pips. So up to the high of the range is still 120 pips, and there's this imbalance here. So just up to fill the imbalance, we're looking at 60, 70 pips from where we are now. So considering what we were looking at on the higher time frames on AU, I really still had a bullish bias, and I was expecting price to basically go higher up on AU. So overall, it made sense if a buy opportunity did get presented during the London session, which is what I was looking for, then it did make sense that that the buy could actually happen and we could see some movement to the upside. So in terms of this trade and why I actually took this trade, I'm going to start from, I'll clear the chart for now and start from where I started from this morning. So coming in to London Open, I saw AU in roughly this position here. Now what we can see, it's been moving down since pretty early in the morning. Just with this corrective nature, it's moving down, and then we start to see price sort of struggling to move lower here. It's not really breaking below this area where all the wicks are from. So I started to look at the actual ranges on the 1 minute time frame. Now what I saw is we've got this here, this high, and then we've got a low created down here. So from this high to this low, that's our range pretty much. Now what you'd expect is if price was going to continue further down, it'd come up to the high of the range there and then just continue making lower lows and lower highs, but that's not what happened. So what we actually saw is price clearly breaks and closes above the high of that 1 minute range, and this is all happening, bear in mind, at London Open. So it's a time where the volume from the institutions is coming into the market. So that breaker structure then creates a new range, and that range is from this high here to this low here. And what I like to use is basically the body of the candle has to break below the wick of the low, otherwise I won't consider it breaker structure. So what happened here is price actually returned down and then failed to actually break the structure to the low. If we actually look at the candle values on this candle and that candle, the body of this candle doesn't close below the wick low of this candle, So what I saw is that this first break of structure was caused by this candle here, and price has failed to actually break below that candle. So this whole thing here with the wicks, what I'll see that as is a mitigation of the point of interest which caused this break of structure, and basically a liquidity grab as well. And the fact that it actually grabs liquidity below the order block, that actually adds confluence to this whole situation, because if the institutions did want to take it further down, there's no reason why they'd start doing this liquidity grab wicks all right at the low of the day. So what I saw this as is overall just a mitigation of this point of interest, and then what adds confluence is that we've got the liquidity wicks. So what I was waiting for now is basically just another break of structure, so that I could then look to enter as this area gets mitigated down here. So we've still not got the break structure, and there we go. Now we've got the break structure. So at this point, I'll class this as break structure. And looking, where did this come from? If we really look, it's come from this low down here. Now, looking here, we can see clear imbalance. So we've had institutional orders coming into the market, and there's probably some unmitigated institutional orders down here, possibly in that wick. But I'm really looking at this whole candle here to buy from. So at this point, based on the fact that on the overall higher time frame, we had a reason for it to go higher up, in the sense that we've got these imbalances up here on the 4 hour and daily. And then considering that it was London open time, so it's the time where institutional volume will come into the market. And then what I've seen here is a break structure, a mitigation and liquidity grab, and then another break structure. So for me at this point, that's enough to be looking to take a buy position. And what's also clear is this point of interest here. This order block is what caused the second break structure. So for me, that was enough to take the buy position. So at that point, I simply set my order. I think in the end, I used a 2.5 pip stop loss or a 3 pip stop loss, and that was it. So as you can see, I put the order in and it got triggered. And in terms of where I was originally targeting, I was looking at the 4 hour imbalance here, this 4 hour imbalance, and I didn't want to get too greedy with it, so I targeted just underneath the complete fill of the imbalance and also the round numbers, so it was 73,900 what I targeted. 73,900. Oh, sorry about that, guys. So yeah, pretty much that. I was targeting just over 40 pips away from my entry, and what happened is price started moving in that direction. So I think at this point, once we'd had this wick, I had the first revised stop loss because I didn't really see much reason. Well, I actually took half a risk off. I didn't really see too much reason for price to come below here, and certainly no reason for me to keep my entire risk on. And then I continued to wait, and after we saw this move here, at that point I didn't really see any reason for price to come below there. So that's my next revised stop loss. And then I'm still just watching price now. Just watching price. take us up to the 5 minute here. So at this point, what we've got is basically this push here and then a mitigation there. So I made my stop loss for a third time just to trail more profit, keep it managed. I didn't really see too much reason for price to come back below that 5 minute area really. Like if we continue with the buy thesis, it's already mitigated the order block. So if it did come back below there, I wouldn't really be I'd really be happy to get out with some profit rather than trying to stay in and just hope that it reverses. So looking at this now, price was getting super close to my take profit, only about 10 pips away, just over. And what I was aware of at this point though is that it was actually the New York Open coming up at 1 o'clock, and this is just after 12 o'clock. So I was watching, and as I saw this next break of structure here on the 1 minute, what I did is I just locked up. I locked up my profit just below that structure there, because for me, even though yeah we are close to the take profit point with the New York Open coming in, I really thought we could just get some institutional volume coming in for sales, and that's why I moved my stop loss there. And in the end, that actually is exactly what happened. New York opened and the institutional sell volume comes in, and I ended up exiting the trade there with my revised stop loss. So in the end, getting out for 30 pips. And on my actual MT4, this was an 11 to 1 trade in the end. So exiting there on revised stop loss, it ended up taking me out for 11 to 1. So I was pretty happy with that. Now on top of this position, I actually took a second position on the same trade, and I'll show you guys that position now as well. So it's the exact same entry, but here, as I showed at the beginning, what I did is once I'd seen this on the 1 minute, I just set my order straight away and then just hope that price would trigger me in and then start moving off. Now here I've got access to the seconds time frame on this account, and this is something I'm testing out, basically trying to get better entries on the seconds time frame. So for this entry, my management was exactly the same, but what I actually did for this one, and I'll show this now. So after I'd set the order on the 1 minute, I moved over to this account where I've got access to the seconds time frame, and I decided that what I'd do is I'd watch the reaction from the point of interest that I marked out on the 1 minute, and if I didn't, and if I saw a reaction on the 5 second, then I'd also take a second position based on the 5 second structure. So that's why I took two entries on this trade, because I wanted to try and get another position with a tighter stop loss, which was based on the seconds time frame. So what we can see, and I'll just jump onto bar replay for this. So I'll walk you guys through it completely. So on the 1 minute, we've got the same structure that I marked on the other chart, and then we've got the point of interest here. So I was looking at the whole thing, I've just drawn it slightly more refined here because of how it reacted. So price comes into our point of interest, and now I was literally sat here. I had my order already tapped into MT4, ready to execute if it happened. So I was watching what happened on the 5 second. So I'll remark that up for you guys now. So watching. Now at this point, I'm still waiting for the first break of structure, to be fair. Yeah, it's really annoying. You sometimes get this on the 5 second where the actual candle close changes, and this happens quite a bit when you mess with the 5-second time frames and the 1-second time frame. I'll just see if I can get the original picture up. So yeah, sorry about that guys, but sometimes when you're on the 5-second, the broker data changes retrospectively. So basically what we can see here is this candle here closes above this one, so that creates a new high, and then we get a low. So we get our first break of structure. So looking at it here, basically this candle here is the first break of structure. Even more technically, now the date has changed, it doesn't close above the high. And then the second break of structure, that's just the same. So to me what I saw was we have break of structure 1 here, then we've got our mitigation here, so that's this part on the screenshot, and then we get our second break of structure. So for me, after seeing that second break of structure on the 5-second coming out of this 1 minute point of interest which I marked, I was happy to take the trade. So I basically just did a manual execution on this one, because on the 5-second you don't really get too much time to place your limit order, and I just wanted to take the trade on a manual execution. So as well as my original 1 minute entry that I've already broken down for you guys, I also took this position, which is a 5-second entry, and this position had a 1.4 pip stop loss, so considerably better stop loss to be fair, and it's almost twice as good. In fact, I think I did get twice as good risk reward in the end. So the real stop loss on the 1 minute entry, I think was like 2.9 pips, and then on this entry it was definitely 1.4. So yeah, it played out just the exact same entry. I did the exact same management on this as I did on my other one, and got taken out for my revised stop loss at New York Open. So in total, this trade did 22R, and the other trade did 11R. So in total, I did take 2 positions, and I got 11 to 1 and a 22 to 1. So total in for the day, 33R profit. So it's pretty much my most profitable day so far in Forex trading, and I'm pretty happy with the trade. So I hope you guys have enjoyed this trade breakdown and have understood why I took the trade in the first place and my reasons behind the trade. And I'm sorry for the issues with the 5-second chart when I tried to break that down, uh, because it sometimes the broker data does just change when you're looking at the seconds time frames. It's a bit different from looking at the minutes time frame. Like in real time, you can see that there was break structure there on the actual chart, but then coming back to it now, obviously the broker data has changed, so officially there wasn't break structure. But yeah, I hope you guys can still understand why I took the 1 minute position in the first place, and then understand why I took the 5-second position based off the 1 minute position to try and get a tighter stop loss. So thank you very much for watching guys, and I hope you guys have a safe trading week and have a good rest of your week, and I'll speak to you guys again at weekend for my pre-market forecast ready for next week. So thanks for watching guys, and please subscribe if you enjoyed this trade breakdown.